All right, good morning, everybody. Thank you for joining us here for the Community Financial Empowerment Certification Programs Train the Trainer on the Louisville Financial Education Community. My name's Joseph Cecil, the Financial Empowerment Coordinator for the City of Louisville. So today's class will be broken down into three parts. We're going to go over the Start Fresh curriculum, the Credit as an Asset curriculum, and then a short PowerPoint on overall resources and tools out in the community here in Louisville. So when you leave the class today, you will be sort of authorized to teach the Start Fresh and Credit as an Asset curriculums with the people you serve. So as we get started here, we will start with the Start Fresh curriculum, which I will pull up here. All right. So what we're going to do today in terms of these curriculums are, I'm not going to go over everything word for word. I'm going to give you the hints and suggestions and tips I use when I facilitate it. One thing we always tell you is make these curriculums your own. You know, follow the information. Don't try to add things that aren't in there, but still make it your own. Be comfortable with it. So, the first thing we like to mention is this opening kind of introspective question, where do you want to go with your money? This is a key thing where you can really drive home the point that a bank account is a tool in your financial toolbox, help you get where you want to go in life. It starts a relationship with a financial institution that can help you access other things, maybe loans, credit cards, things to access the things that we all want, homes, cars, maybe open up our own small business. And the focus on the Start Fresh curriculum is going to be banking, because there is an end product with the Start Fresh workbook. It is intended to help those who need a second chance bank account, those people who have struggled with banking in the past and may have had an account closed on them. So we'll talk about how that certificate works a little bit later. But so just know that going in, the Start Fresh workbooks focuses on banking with a little bit on budgeting. So the first thing is you've got these questions throughout the workbook. You're going to see these scattered throughout there. Segments like, why do you want a bank account? What will you use it for? What are some goals? This is where you can dive into these if you want to. You're not required to go through all these questions with the people you're working with on the workbook. These are great icebreakers if you're dealing with a group of clients, people who may not know each other as well. These are good icebreakers then, but you do not have to go over them every time if you do not want to. And also, you don't have to go over every single one. If you just want to pick a couple, that's up to you as well. So the first bit of information we really hit on is financial institutions and the differences between banks and credit unions. I'm not going to go over everything here, but the big thing is the huge major fundamental difference between the two is that a bank at the end of the day is a for-profit business where you're a customer, and a credit union is legally a 501c3 or community nonprofit organization, and you are a member of that credit union. You'll see here that they each have, I like to hit on that they each have advantages and disadvantages, and they tend to play off each other. So the advantages of a bank tend to be the disadvantages of a credit union. And the advantages of the credit union tend to be the disadvantages of the bank, right? Now, one thing we ask you not to do if you facilitate this class is not to mention specific banks or credit unions, good or bad. Because the last thing that the program needs is people either being steered toward a specific financial institution or steered away from a specific financial institution, especially if they're a partnering financial institution. You are allowed to share your personal experiences. You are invited to share your personal banking experiences, but just say the financial institution I was with or I am with. Just use that generic term, please. But I like to, end the financial institution section by saying at the bottom here, at the end of the day, as much as I just made the information look like bank versus credit union, it is not. It is bank or credit union. It's about whichever one fits your needs the best. And I even like to joke, there's no law that says you can't bank with both and get the best of both worlds. But the last thing we want is someone getting two separate accounts at two different institutions and then struggling to keep up with making sure they have the right amount of money in each. So the next couple pages are comparison shopping checklist. The first page here, these are what I like to call the logistical questions. You know, where is the branch located I'm looking at? What are the hours? A big one today is, how many forms of identification are required to open an account? Many institutions these days are requiring a minimum of 2 forms of identification. The next page, these are the account questions. This is the real comparison shopping. These are the fees and requirements that we never tend to ask and then wonder where our money went. You know, this is the fine print. You can even do this in your class. I sometimes suggest this if you have a bigger class. You know, print out 3 random financial institution basic checking accounts, black out the names, and give the participants each of the 3 accounts as an activity. See if they can find all the questions. But, you know, these are the questions we never ask, and then we wonder where our money went when we get hit with these fees and these requirements. So that kind of covers the basic introduction. Then you launch into using an account. And just like for the purposes of this class, when I go through it with people I serve, I don't hit on everything word for word. A lot of the people we're going to be using this with have had a bank account. You know, they know what a deposit is, for instance. What we like to focus on are the modern changes that are happening in the banking world. So for instance, when we hit on deposits, you know, there are the 4 different ways to do it: direct deposit, manual deposit, ATM deposit. The one we like to hit on is the newest one, mobile deposit. You know, it's where the person opens up their app on their phone and takes a picture of a check front and back and deposits the check through the app. You don't got to drive to your branch. You don't got to walk in person. It saves a ton of time and convenience. But we've discovered there is a safety risk with mobile deposit. Now, everyone likes to think it's your phone getting hacked. That's 90% of the answers I get when I ask during a class. That is usually not the case. Most financial institution apps are probably the safest app on your phone. They have very strict and strong security. When we talk about safety and security concerning mobile deposit, the concern is this: the person conducting the mobile deposit has to keep that check until it clears, and then they have to dispose of it properly. Instead of a manual deposit where you turn it into the financial institution and all the risk is now on the institution if anything happens to that check. So you're just taking on that little bit of extra risk by doing a mobile deposit. Does that make sense? I see one head nodding. Okay.
Joseph,
You got deposit.
sorry, Joey, can I ask a question?
Yeah, sure.
The other concern, at least it came up with something that we've experienced, is when forging a check, because, you know, we had given
Yeah.
a check to a person, and she actually, it was for her landlord, but she tried to take the picture of it and do it mobile wise.
Sure.
But somehow the bank luckily caught it. But by the
Yeah.
time they caught it, the transaction, I think, almost went through. I don't know. It was a big mess. So
Yeah.
I wonder if that's also another thing that you've ever heard of, or, you know, come
Well,
across.
that's just in general with checks.
Okay.
You know, checks are some of the least safe and secure ways to pay for items out there.
Right. Right.
And you know, and we'll talk in a couple pages why checks are slowly but surely being taken out of the financial world, and that's one reason.
Okay.
All right. You've got deposits and endorsements here. Cover this if you want to. Big thing to hit on though is the funds availability. When the money's gonna be in my account. If you deposit cash, it's pretty much there immediately. But a check, the key phrase is 1 to 2 business days. Right? That's when the bank is open for business. Now, some of these institutions are open for a few hours on a Saturday morning. Some may count that, some may not. So it's important to stress that if you're working with someone through this workbook, they need to ask their financial institution, do they count Saturday? Because that can make the world of difference. If you deposit something on Friday that needs to be there Monday, that Saturday can make a world of difference. You've got a sample deposit ticket here. You do not have to go through this. I like to highlight if the person feels like they need assistance with this, that's what the teller is there for, to help them with it. Now you do have a sample check here, and here's where I like to play a game. I like to say if you've got this check here, it's made out for $250. Let's say I went to the number box here, box 3, and I took a little bit of white out and got rid of that period, and instead wrote a comma between the 2 and 5 and made it 2,500. I'd like to ask, which one is the financial institution going to accept? Box 3 or line 4? And which one is it? Are they going to accept box 3 or line 4? What do y'all think?
Line 4, I don't, yeah, that's a hard one. I think they look at both, and I don't know.
Well, they do look at both, and if they do accept it, because the common practice now is to not accept it if there's a difference between the numerical box and the written out line. But if they do accept it, they always take line 4, because that would be so much harder to edit and fraud than the number box. Also, I'm sure we've all seen when you deposit a check in person, they send it through the scanner. Maybe it might look like a little horseshoe style scanner. That has 2 purposes now. The original purpose was to scan the front of the check to get, the bank account number, the routing number, and the basic information. But nowadays, they also scan it to see if there have been any alterations to the check. Because someone may not notice a little dab of white out getting rid of a period. But the scanner will. But speaking of checks, we do not cover too much on them anymore because, to be honest, it is a dying way of paying for things. They are slowly but surely being phased out of the financial world. I think at last count, check use has decreased every year for the past decade by at least 7 to 10% per year. So checks are slowly but surely being phased out of the financial world. The reasons for that are how long it takes to pay for an item with a check. You have to keep that money in your account until that person or institution uses the check. And also, checks, used to come free with your bank account when you opened one. Now you might be paying $20 to get a batch of checks. And who wants to pay $20 for something they may never use? As well as in today's technological digital world, online payment has made it so much easier to do things where checks used to be the way of payment for those certain things. But while checks still exist, the main thing we cover with Start Fresh is making sure you use them safely and responsibly. The big thing is making sure you get rid of them properly. So we mentioned, once you're done with a mobile deposit, or maybe you messed up writing one. What is the best and proper way to get rid of a check? What do you all think? And actually, I'm going to pick on Shannon.
I would say shred. I knew you was gonna do that, Joy. That's why I came on up. I would shred it.
Okay, that is one step. You're correct. You're missing a step, though.
Oh, black out all the information and then shred it?
Very close. I'll accept it. It's void and shred.
Yeah.
Okay.
But here's where we add layers. When you void, you can do void 20 times, 1,000 times on it, or one big time. Do it in a permanent marker ink like a Sharpie.
Okay.
Don't just do it in a regular pen. We have found instances where people have dumpster dived for checks and voided them of regular pen ink.
Wow.
But a Sharpie will always leave something behind. And shred is correct. Shred, rip. One of my coworkers, she says she burns hers. You can't tape ash back together.
Oh, that is
She's not
true.
wrong. She's not wrong, but I also think she's trying to get me to burn my house down. She's got some nefarious means. And the extra layer when it comes to shredding and ripping is separate trash bags. Dispose those pieces in separate trash bags. That way you make it that little bit harder to put that check back together. Just keep this in mind. I like to use, examples here. Like if you've ever seen the movie Catch Me If You Can, the Leonardo DiCaprio, Tom Hanks movie about check fraud back in the 60s. He was able to accomplish all that back in the 60s. And we live in 2021. Technology has gotten just a little bit better since then. So never underestimate what someone will do to put a check back together and use it. The next section is on using your debit card. When you cover the PIN, just make sure one of our suggestions is that you change your PIN or try to change it at least once a year. With the rise of hackers and card skimmers and every other technological way of trying to get into someone's account, it is suggested you try to change your PIN at least once a year, as inconvenient as that may be. You've got this activity on the next page if you want to use it. It is completely up to you. It's just matching the different parts of a debit card. I do still like to hit on things whether I use it or not. Like, for instance, the chip. The chip is not a labeled part of this card, but I like to mention it because there's a reason it's there, and that is for security. Now, before cards were chipped, as insane as this may sound, the transaction ID on your purchase at a vendor or business was your debit card number, which is your savings account number. So literally, if someone hacked into that business, they had everyone's bank account numbers. I don't know how that was allowed, that it was just your bank account number. But the chip now, every time you use it, not only if you use it in person does it ask for your PIN, but it also will scramble up your transaction ID into a unique number every time you use it. It is not your bank account number anymore. It is just a random, unique number every time you use your card. The second thing I like to point out is number 8, the security code on the back of the card. It's become the second most important financial number in your life behind your PIN, and that's because of the rise of online purchasing and shopping. They don't ask for your PIN in online shopping, they ask for this 3-digit code. So that's why when I cover this, I like to make a point that when you buy something online, you need to make sure that is an account with that store or vendor. You make a decision. Are you going to check that account frequently and use it? Now, when I say account, I do not mean bank account. That's where I got to be very specific. Because I don't want people closing their bank accounts over a store purchase, right? An online purchase. When I say account, I mean online account. You know, when you got to create your account to order something. If it's an account you're going to check frequently, like maybe an Amazon account, you can keep it open. You'll notice if someone hacks your information and is spending on your card. But if this is a one-time purchase and you're never going to visit this website again, once you get what you ordered, do your best to get rid of your information off that account. Delete that account as best as you can with that vendor. You know, you've got monthly statements here too. This is short and sweet. Make sure you're not getting charged for it. In today's world of digital, if you get this mailed to you in a paper statement, some places are charging you $5 just to get it mailed. No one wants to pay $5 to access this when we can get it emailed for free. Also, if you do get a paper copy, you got to dispose of it properly. Because look at all the sensitive information on here. You know, we got to get rid of this properly. Shred it, burn it, keep it, whatever you want to do. Now, overdraft protection. This is where we as a program, Start Fresh and Bank on Louisville, make a suggestion on using your account. Overdraft protection on paper sounds great. You're going to opt into it, you're going to pay a monthly fee, and they're going to extend your account a certain amount if you happen to overspend. So you will not deal with all of the massive amounts of fees from an overdraft. You'll just deal with the monthly fee and you have to pay back whatever you overspent. On paper, it sounds great. But unfortunately, we've seen instances where people tend to deliberately overspend their account because they're already paying that monthly fee. Might as well put it to use. So you are always allowed to opt out of overdraft protection. And that's what we suggest. Just let your debit card get declined. But the problem is, opting out of overdraft protection, you can still overdraft your account 3 separate ways. The first way is you can always bounce a check. While they still exist, you can always bounce a check. Write a check for more than what's in your account. That can always happen. Number 2 is automatic bill pay. This is where you've given a vendor or business the authority to go into your account on usually a monthly basis to pull out your bill amount, and that computer from that vendor does not care how much money is in your account. It is going to reach for a certain amount it's been programmed to reach for, does not care how much is actually in the account. That can cause you to overdraft as well. The third one is the dumbest. I don't know how it's a practice, but it is. That is paying at the gas pump. When you pay at the gas pump, your card then and there is only charged $1. The gas station comes back the next day at the earliest to get the rest of the amount that you charged the night before. Or day before, I should say. It is called the pre-authorization fee. So when you use your card at the pump, you are only charged $1, and they come back for the rest the next day.
Okay, Joy, so let me ask you this question. I just experienced something the other day that freaked me out. So every time I use my debit card, I get a text message for the transaction.
Yes.
But I just learned that for Kroger's and Thornton's, if you use your debit card, the transaction notice was that they're holding $126.
Yes. So here's the thing. Thank you, because that leads into the next point. That's
Okay.
not actually Thornton's doing that. That is your financial institution. You'll see here at the bottom, many financial institutions now, to help protect against this pre-authorization practice, may put a hold on your account between $1 and $125, which is a ceiling you can't drop below in order to cover however much gas you pumped. They want to make sure you have that money in your account so you don't needlessly overdraft because of this idiotic practice.
Joey, I'm sorry. So Joey and Shannon, I think I guess I never really ever noticed this. So when I try not to use my debit card, but my credit card
Sure.
at the gas pump. So you're saying that we get charged an extra dollar every time we use our.
No.
Okay,
It's not
okay.
charging you extra dollar. It charges you $1 of the total amount you pumped.
Okay.
And then it comes back for the rest the next day.
I see.
Right?
Okay.
And I've yet to be able to get a clear answer from anyone related to the gas station companies on why this is a practice. It's a practice at every gas station.
I see.
But the odd thing is, if you go inside, your card is charged then and there for the full amount.
Huh.
But not at the pump.
Interesting. Okay.
So, Shannon, did that answer your question?
Yes, it did.
Perfect. So that's the one thing to be aware of with overdraft protection, especially that pre-authorization fee practice by the gas stations. Last thing is online and mobile banking. Very short and sweet. Just make sure to practice safety. I always got to harp on logging out. Most apps will time out after 90 seconds of non-use, so they're pretty safe. But desktops, especially public computers, got to make sure you log out. Also, look for added security. Many financial institutions today are offering what's called two-factor authentication. Very fancy term for a second password beyond our PIN or our password to log into our mobile app. What the two-factor authentication will do is, if you're trying to do something on your bank account remotely, through your desktop or through your phone, your bank has the authority to call you and ask for a verbal password. Something you set up with them that only you know. That way, if someone was trying to use your account and hacked into it, they're not going to know that verbal password. Also, I like to make the participants sound like celebrities here, and I encourage you to do the same. It's a little different now, but I still like to bring it up. Make appearances at your local branch. Be known, be seen, be recognizable, because it makes a world of difference when you need to access something else or troubleshoot an issue if they already know who you are. But with everything going on in today's world, many branches are closed to in-person appearances. So you can only go through the drive-through. But don't just bank entirely online or through your phone. Try not to. So that kind of sums up the banking section. You've got this reflect on your progress if you want to go through that as well. Any questions on using a bank account that I did not cover if you were to facilitate this, or just in general? All right. Seeing none, I'll take none. Our last section, a much shorter section, don't worry, is on budgeting and spending. You've got this first thing to cover is a spending diary. There's a full page of this in the back of the workbook. This is just cut off so we have the different information pieces here. I always suggest that someone do a spending diary for a full pay period and track every purchase. The first thing to look for is something we're all guilty of, is what is our habitual spending? Our spending that's part of our daily routines and habits, we usually tend to not even think about the dollar amount we're spending. Normally this is food and drink related or vice related. Vice being the generic term for, cigarettes, lottery tickets, things of that nature. But we're all guilty of habit spending, and we tend not to even think about the amount of money we're spending because it's just part of our daily routines, where it's ingrained with us. We're used to it. I highly suggest using a personal example here if you got it. Mine was, and still is, when I first started volunteering as an intern with my work team, I was told we report every morning at 8:30. And I just finished a 4-year degree and was taking master's night classes, and I had not seen 8:30 in 5 years. I did not know what it looked like. I was like, so I had to go get something every morning to help wake up, and it was an energy drink. There's a Thornton's conveniently on the way to my on-ramp every morning. Stop there, get an energy drink and a snack, and, head to the office. But about 3 months into volunteering, I got used to that sleep schedule. But there I was one morning pulling into that parking spot at the gas station going, why am I here? I'm not tired. Because that was my habit spending. We're all guilty of it in some way, shape, or form. It's not a problem as long as you account for it. Also, wants and needs. Don't sit there and go over everything that's a want or a need. I'm pretty sure we all as humans have a good idea what's a want and what's a need. But your key is to not overspend on a need and therefore make it a want. We tend to do that with two main categories like food and clothing. We'll convince ourselves we need something and then overspend on it, which therefore makes it a want. My favorite example of this is what I like to call the double down when it comes to our food bill. We've got food at home, and what do we go and do? We go and order out, we eat out, we get takeout, right? We've just doubled our food bill for the day. You've also got method of payment. I like to mention you need to mix up. Have some cash, have some card purchases. You can mention this if you want to. They've done studies that they attach sensors to people's heads. When they paid with cash, the same areas of the brain lit up as when you experience physical pain from paying with cash. You have a sense of handing over something. You feel the loss of that cash. When they paid with card, darkness. The same areas did not light up. There was not that attachment. Like you're losing something because it's all digital. It's just a number on a screen. So it does make you kind of decrease your spending a bit when you use cash. Now, I also realize we are no longer a pen and paper society. So who wants to carry around this sheet of paper for 2 weeks? Nobody. So at the bottom here, you've got apps that you can point people to that will do this for them. My favorite to recommend is mint.com listed here. It's an app and a website. It's completely free. It asks you to link any open bank accounts and credit cards. It is extremely safe. I have never had an identity theft issue in the 5 years I've used it. It is tremendous. It will track your spending and create a customized budget for you. But if you want to go through a budget with them, we've got a budget document on the next page. What I like about this budget template is it's got actual versus desired. Where are we versus where do we want to be? And that's very powerful. But just, don't let someone put like $0 under LG&E or water, because that just ain't going to happen. You can live in a cave and they'll find you for a bill. I know it. But some people just don't want to think about budgeting. It intimidates them. It may feel restrictive, or they just may fear they don't know enough. That's why at the top of the next page, we have broken down budgeting to its most simplest, bare bones form, which is how much money comes in minus how much goes out. Just that math problem, income minus expenses, equals your budget. That's it. That's a bare bones basic budget at the end of the day. It's not some fancy document like I had on the previous page. A basic of basic budgets is how much money comes in and how much goes out. That's it. You can go into, if you're in the positive, you make more than you spend. We suggest one of two avenues. The first is emergency savings. You can never have enough money set aside for an emergency. Also, if you owe any debt, make more than your minimum monthly payment. Now, if you're in the red, you spend more than you make, let's go back to that spending tracker, see where we can cut back. Or are there some bills, maybe we can get a lower amount for? There's no shortage of ways to cut back on things. But that is actually the end of the workbook. You've got different questions you can ask here, setting up your goals for the future. You've got some safety tips. You've got how payday loans work and check cashing. But the big thing to go over now is how to use the certificate that comes with it. So let me pull this up. This is key. Let me find it. Here we go. So this is what it's going to look like. When I send it to you all, it'll be a PDF. I will not have my name or the date, because obviously you'll be the ones facilitating it, not me. And the date will not always be March the 12th. There's a reason for that, though. If you do give out a certificate, they need to put their first and last name under name or on the line name of participant as it appears on their ID. The date is the day you finish the class. Now, here's the key. When you take this curriculum from here on out, you do it at your own pace as you like. You don't have to sit down and go through the entire workbook in one sitting if you don't want to. If you only need to cover, using a debit card with someone, we ask that you not give them the certificate, but you're more than welcome to just cover that section, right? But if you complete a class, when you give out your certificates, put the date of the class when it's done, because we ask that you enforce. It is a 30-day until it expires. There is time bound on these certificates. Now, you can mention this. You are allowed to give one free reissued certificate. By free, I do not mean there's a cost. That is not the case. What I mean by free is, in the past, unfortunately, people have gotten multiple certificates reissued and then tried to go open 4 or 5 different bank accounts. And that's not the point of the Start Fresh curriculum. So if you have to give out more than one reissued, we normally request that they come back to another class. Unfortunately, putting skin in the game because of the people in the past who have ruined it for everyone else. So that's the front. The back is key. This explains, what is Start Fresh, what is Bank on Louisville, what is the certificate? Because here's the key. Here's where they can take it to. Here's our list of partnering institutions. I cannot emphasize this enough. You can assist them with this if you like. Call ahead. Find the branch or tell them to find the branch they're looking for and call ahead to ask to speak to someone with knowledge of the Start Fresh certificate. Because I will bet you, sadly, if they just walk in off the street with this piece of paper, they may not find someone there who knows what this is. Because unfortunately, if it was my job to go around and educate all the tellers at all the branches of all these partners, I would not be available to give this class today. I'd be out there somewhere visiting a branch. We do our best to give the information to our partners to spread it, but we know that's not always the case. So have them call ahead, right? Also, if they've run into issues with a previous partner on this list, very simply, don't go back. Go to someone else on this list. One thing we cannot guarantee is that they will be able to open an account with every person on, I'm sorry, not person, institution on this list. Every institution has a separate process for getting someone a second chance bank account. One thing we try to guarantee is we will do our best to work with someone to find a partner. It may not be their first choice, but we will do our best to get someone connected. The last thing is, if you are working with someone and they just can't seem to get connected, or they're they've talked to a branch and they can't find anyone there who knows anything about the Start Fresh certificate. At the bottom of the certificate is my contact information. Have them reach out to me, preferably email, and give me as much information as possible. What specific branch was it? For instance, I'm going to pick one at random. Don't tell me it was the PNC in the Highlands. There could be 2 or 3 there. Give me the address and give me who you talked to. Because the contacts I talk to at each of these partnering financial institutions is above the branch level, and they do not like to hear that one of their branches does not know about this program. So that is Start Fresh and using the certificate. Any questions I did not cover?
Joey, I just wanted to ask, so this is for not just for people who want to get a second chance on banking, but also for new individuals who just are banking for the first time.
Correct. Yes, it can also be for them.
Okay.
It's great information for first-time bankers. The only problem is they may not need the certificate at the end. It's not a
Right.
problem,
Yeah. So for the folks that are banking for the second time, meaning the first time something happened and
Yes.
they were not able to bank anymore. So going through this class allows them to be able to bank again. And these institutions are aware, at least supposed to be aware.
Yes.
Yes. And they do need to see the certificate, correct?
Yes.
Okay.
Yes. And again, they should be aware. They're not always aware. That's why I say call ahead, ask to talk to someone. So any other questions on using that curriculum or the certificate?
Joey, is there a book or any other to get, like, if I wanted like a deeper understanding on Start Fresh, like, do you have like a workbook or anything, or just to, or I think there's a separate class for this, or I think, right? Or no, is this it?
No, this is it.
I got you.
Yeah, unfortunately, we do not have a facilitator's guide. It's just the workbook.
Gotcha.
Now, is that the workbook, Joey, that we got from the first one?
I'm sorry, what, Shannon?
Is that the workbook that we got from the first class? That booklet, is that something totally different?
Which class are you speaking of?
I think it might have been the level 1. Is it some of this information?
No, ma'am. No, ma'am. It was not covered in the level 1.
Okay.
No, I will be sending this workbook out once we are finished today.
Oh, okay. All right.
Right.
That's what I wanted to know.
Yeah, it's literally the workbook we just went over.
Okay.
The first part of this class.
Perfect.
Okay.
Okay.
But it's room to put it in the first one that we have. It was like a binder, so we can put it in. Okay.
Yes, if you would like to. Also, I always make it known, like, if you want to attend one of my Start Fresh classes to see how I facilitate it, you are more than welcome to. We offer it once a month.
Okay.
All right. So I will exit out of this, and I will pull up our second curriculum, which should go a little quicker. Credit as an asset. Once I find it. Here we go. All right. So now we've got credit as an asset. Again, just like Start Fresh, I'm not going to go over everything word for word. Just going to hit on how to use it, So, you start here with kind of what is credit. Don't feel the need, the words are bolded. They're in the back of the workbook. Don't feel the need to go over every definition because we're going to hit on them later in the workbook. This is a good page to kind of start on, an introduction to credit and all the terms we're going to see. Things like, hit on a term, which is how long we take out credit for. The two different types of interest, fixed and variable. What is APR? People think it's the interest rate because it's shown as an interest rate or it's shown as a percentage, but it's not. You got your two main types of credit here: installment and revolving. And then you got those subtypes, whether a line of credit is secured or unsecured. So be sure to hit on these. We'll have it uploaded at some point this year to that database too. Is our certification training class on credit. So if you would like a deeper dive into the credit world, if you've already attended that one, you can go back through it, or you're welcome to watch it or sign up for it when we offer it this year too. We've got the credit industry. There are three main players. There's you, the consumer. There are the creditors who determine who has access to credit. And you got the credit bureaus. They're the ones who collect and store and report our credit information. There are three of the credit bureaus in the world: the Equifax, Experian, and TransUnion. This is where I usually like to ask a multiple choice question. Are the credit bureaus A, private businesses, B, run by the banks and credit unions, or C, run by the government?
Government?
What do y'all
Are they
think?
run by the government?
I got one vote for run by the government.
Two.
They are actually private businesses.
Oh.
Yep, they are not associated with the government or the banking world. They are private businesses, and that is because they hold the patent for the credit score formula. We'll go into a little bit more on that later, but that is where I also like to mention, if you've ever received a pre-approved credit card in the mail, that is why. One of the ways they make money is by selling people's credit information, addresses and names. As shady as that sounds, it is legal. On the next page, you've got, at the top of it, you've got kind of one of the catch-22s of the credit world that usually works against the consumer, which is you may have a positive payment history, but the minute you miss one payment, they can report that missed payment. That is usually like landlords, utility payments, things like that. They do not have to report the 24 months you were on time, but they can and will report the 1 month you missed. So you don't get that positive track record. All you get is that one little piece of negative on your credit score and credit report. At the bottom of this page, we've got the big, actually it's not even big, it's the small list of who is checking credit these days. And this is just a tiny list. Housing, anything to do with housing, applying to rent apartments or applying for mortgages, they're going to check your credit. Transportation, trying to buy a car, getting car insurance, even renting a car. They're going to check your credit or want a credit card. Many employers, I think at last count, close to the number I believe was 43% of employers perform a credit check as part of the hiring process. Here's the key. They have to tell you they are doing a credit check as part of that process. They don't have to tell you whether or not it factored into their decision to hire you. Cell phone carriers, they can do credit checks. That can impact how much your bill is or what phone you're able to get. And in general, trying to access other credit, they're going to do a credit check, of course. Again, here's another one of those activities like Start Fresh you are welcome to utilize if you want to. It's a match game on the different types of, or on the different credit terms that we went over and what the definition is. So now we launch into why does good credit matter? The first thing is it creates opportunities to save. So I love these charts down here. If you look at this auto loan, between bad credit and good credit, we're saving 14% on an interest rate and close to $70 on a monthly payment. I don't know someone who wouldn't love to save $70 a month. In housing with a mortgage, bad credit's not even getting in the door. Okay credit versus great credit, it's a 1.6% interest rate difference, which may not seem like a ton, but it's massive when that's 1.6% interest on something that is six figures normally. You know, a couple $100,000 possibly. That's a massive number. Your monthly payment is close to $200 cheaper just because of your credit score. So a good credit score helps to create those opportunities to save money. It can also improve your employment and housing options. One of my favorite things that good credit can do is it can help you buffer economic shocks. I never advocate maxing out a credit card, ever. But in the middle of an emergency, it is great to have that piece of plastic in your wallet that has a couple $1,000 spending limit on it. You know, you never want to max out that card, but it is great to have that security in your wallet, that you've got a piece of plastic that is valued up to $3,000 to $4,000 to $5,000 on your spending limit. It can make a difference. So now we go into kind of some of the separate areas. So credit building, it's the process of establishing and maintaining a positive credit history. Credit repair is not the same as credit building, though they are related. When you try to repair your credit, it focuses on fixing errors on your credit report, getting debt and collections off your credit report, and reducing your debt. Do beware of the credit repair companies. You've seen these people advertised on street corners. We'll fix your credit. Call this number. I'm going to tell you this. All they're going to do is something we're going to show you how to show people to do later on. All they're doing is disputing everything on your credit report in hopes that the credit bureaus do not get back to you within the 30-day required window. And after 30 days, if they don't get back to you, you have the right to say, I want that taken off my credit. That is literally all they're doing, is disputing everything. There is no magic way for them to fix someone's credit. The only way for you to fix your credit is for you to fix your credit. You know, there's not some magic button people can hit at another company or organization. The big way to build your credit is through what are called active trade lines. There's a lot of can possibly be confusing information here, so I like to narrow it down to an active trade line is nothing more than an active line of credit in your name. Open a credit card, a loan you're paying back. Those are examples of active trade lines. So again, you've got a great tool here for, where do you want your financial life to look like? What are some goals? Because that's the first step in building your credit, is setting goals. How can credit help me get to my goals? The second thing is, well, we need to know where our credit stands, and that's pulling our credit report. One of the most important pieces of information I will cover today is how to pull your credit report. Go to this website, annualcreditreport.com. By law, you are allowed to access your credit report for free yearly from each of the bureaus. So you get one free credit report each from TransUnion, Equifax, and Experian. And it's through this website run by the federal government, annualcreditreport.com. You type in free credit report to Google, you will go to 1,000 different websites before you get to this one. And they're going to want you to pay every time. Also, a tip. When I say one free report yearly from each of the bureaus, that is not a clock that starts January 1st and ends December 31st. It's a clock that starts when you pull that credit bureau's report. So if you pulled Experian tomorrow, that just means you would not be allowed to pull Experian again until March of next year. Right? Equifax in August, not till August of next year. TransUnion in December, not till December of next year. Does that make sense? It's not a clock that starts on a yearly calendar, January to December. It's a year from when you pull it. So that way you can actually kind of space out your credit pulls and do your own kind of credit monitoring.
Right. Joey, so I have a question. So say that we are pulling our credit on annualcreditreport.com, and then,
Yes.
3 months later we go to get a car and to get a loan, they pull. Now, would that matter or affect us in any way?
No.
Okay.
We're going to go over in a little bit what impacts your credit score and what doesn't. You pulling your credit has no impact on your credit.
Okay.
Yeah, that's an old wives' tale I've heard, is you can't check your own credit. That's false. It has no impact.
Yeah, I just wanted to make sure, because when they
Yes.
pull the credit and when I pull the credit, just want to make sure I'm not going to be, they won't be able to because I already pulled once,
No. We'll go over that in a couple pages.
Okay.
All right. Also know this: when your credit report is not a complete history of your use of credit, it is a 7-year snapshot in time, which means as you close or complete products, they will rotate off within 7 years. They are not there permanently. So you have a sample credit report in here. It's, if you download it off annualcreditreport.com, it will come as a PDF, so you can save it to your computer. Should also mention, if someone just I don't like the internet, I don't like computers, I don't trust it, you can call and have it mailed to you, or you can send a written request. But if you get it downloaded, or in general just have it sent to you, it's going to look very similar to this. The sections to know are, you're going to have your identifying information, your name, addresses. There may be an alias listed there. All that means is someone went through a name or identity change. If an alias is listed there, please make sure it is accurate. There may be some employment history. Now, public record information, that should be something that is recognized ahead of time. You'll know whether you should have information there. Public record information is nothing more than you lost a judgment and owe someone money through the court system. Right? That can mean a bankruptcy. That can also mean, you got sued by a bank or a credit union or a creditor, things of that nature. You should not be surprised by public record information. Next page, there may be information under collections if you've got old debt that you've never paid off. Here's the key thing about collections. It'll stay on your account or stay on your credit report as long as the collector keeps reporting every month they're trying to find you and get paid. That's going to be listed here as verified, right here in the bottom right. Now, if they do not verify for 7 straight years that they are looking for that debt from you, you have the ability to let that rotate off of your credit report. So for instance, this is now outdated, that's 6/12. Let's say this was 6/14, which is June of 2014 was the last time anyone said they were looking for this debt. That means June 2021, it's scheduled to rotate off for lack of verification. If I were working with someone looking at their credit, I might say, you know what, let's not dig this up. Let's let this just rotate off, A key thing is, though, if a collections account rotates off your credit report, that does not mean you do not still owe someone money somewhere. You do. What it means is it's no longer negatively impacting your credit. I also cannot get a clear answer on double jeopardy, which is a legal term for someone being charged with the exact same crime twice. What I mean is, if a collections account rotates off and another debt collector comes in and buys it and says, I'm looking for it, can that same collections account reappear on your credit report? I cannot get a clear answer from the bureaus, which makes me think the answer then is yes. It can reappear, sadly. Trades, that's going to be nothing more than the open lines of credit, those active trade lines I talked about. You should recognize every one of those. Now remember, if you close out a card or pay off a loan, it may still be on there for up to 7 years once it's been closed. So don't freak out because you thought you closed it. It is allowed to be on there for up to 7 years. You're also going to see something at the bottom, inquiries. These are the credit checks. So there are 2 types of hits in the credit world. There's the hard hit and the soft hit. So a hard credit check is anytime you are looking to access credit. So this is you going to look for a car, trying to get a credit card, things of that nature. A hard credit check usually dings your credit score a couple points every time. So you may be thinking, oh great, I'm about to go get a car. Now I can't go comparison shop. So if I go get 4 or 5 different quotes, my score's going to drop. That's not correct. By law, you are allowed to comparison shop. The credit bureaus are supposed to notice that within a period of time, usually 14 to 21 days, they're supposed to notice that you are getting a number of credit checks by similar vendors and businesses, and they're supposed to collectively term all those credit checks as one credit check. I always say, don't trust them to do that. Call ahead and let them know you or someone you're working with is about to be going to look for a car or a home. And they'll give you the window you have. Usually it's between 14 and 21 days to get as many quotes as you want. Now, a soft credit check does not impact your score at all. And that is anytime someone checks your credit, that has nothing to do with accessing credit. That's you pulling your credit. That's a cell phone carrier checking your credit, an employer checking your credit. You know, I like to say you can check your credit every day of the year if you want to. It will not impact your score. All it will impact is your wallet. Because after the first free credit pool, that's all you can get. After that, you got to pay to access your credit report. So any questions on reading credit reports or going over them that I didn't cover? All right, seeing none. You've got a great comparison checklist here for going over the credit reports from each of the 3 bureaus. Now, here's a key thing. I mentioned disputing errors earlier when dealing with the credit repair companies. Most recent studies and reports that there are about 25% of all credit reports contain errors or incorrect information. The majority of these errors are harmless. It could be a misspelled name or address, but some could be major, such as someone else's credit being put on your credit. Excuse me. Or a negative credit account that you closed out and paid off that has not rotated off within 7 years. If you need to dispute something, you have the right to do so. There are 2 ways to do it. You can go through the website of the credit bureau, or on the back of this workbook, there's a sample dispute letter that you can send verified mail. And we'll talk about why you do that in a second. But if you're going to dispute something, tell your story, but be clear and concise. Provide as much documentation as you can. And send your dispute letter by certified mail. That's my favorite tactic. Because with certified mail, you get a receipt of when that person receives it. By law, they have 30 days to respond to you with their decision on your dispute. Also by law, if they do not respond to you within 30 days, you have the right to say, I want this taken off my credit report immediately. Right? That's why I love to send it by mail, especially certified mail. You know when that clock starts. So understanding credit scores. Unfortunately, when we went through that credit report, you will notice there is not a credit score listed there. So most of the time we go through life without really knowing where we are on our credit score. You can use places like Credit Karma as long as it's the free version, but the problem is your credit score is the combination of the credit scores from the 3 bureaus. It's the average, right? Credit Karma is only 2 of those 3, so you're missing that last one. One thing we'll never know, one of the banking representatives we work with has a great quote on this. He goes, one of the 3 things I'll never know in life, never have access to, is the Coca-Cola recipe, the KFC herbs and spices, and the FICO credit score formula. They are all patented, protected, and under lock and key. We'll never know what actually makes them up. Just know with your credit score, it generally ranges from 300 to 850, and the higher the better. He also has a great metaphor for your credit score here. Think of your credit score as going on a road trip. If you're subprime, aka bad credit, you tend to get left at home. You're dangerous behind the wheel of a car, and you're dangerous with that credit card in your hand. Excuse me. If you're good credit, you tend to be, you tend to get in the car, but you're not driving. You'll get access to credit, but you usually won't be able to negotiate terms and conditions. You got great credit, you're super prime, you're driving the car. They want to work with you because you pay back what you owe. You'll be able to negotiate terms and conditions. Also know that if you do have a way of seeing your credit score, a Credit Karma, or a different app, that may not be the score when you go to access credit. That is because, as you see in bold here, lenders can request your score be weighed or calculated differently than the normal generic calculation. Sadly, this usually lowers your score. It is not meant to do that on purpose. Just know that ahead of time. But what impacts your credit score, though? What are the things we need to do? There is no magic button. The key is nothing more. The most impactful thing to building your credit is an on-time monthly payment, month after month after month. That is the most impactful thing you can do to build your credit, is building up a track record of on-time monthly payments. That's it. And it does not matter how much that's for, how much that monthly payment is, as long as you make it every month, month after month after month. Also, fancy term here for credit utilization ratio. All that simply means is try not to use more than 30% of your spending limit on your credit card. If you go over 30%, it may look like you're a bit too reliant on using that credit limit and that line of credit. They like to see, the credit world likes to see you use longer term products. This is where I like to say there's a new rage in the financial world, new rage in the financial world of the 0% interest rate credit card, right? Transfer over to us. We won't charge you interest for this introductory period of time. Well, the problem is you're closing that previous card. And remember, when we close a line of credit, it rotates off within 7 years. So keep open those good, positive credit cards, regardless of all the temptation to go to the newer, flashier card. Because the minute you close that good, positive account, it disappears within 7 years. They like to see a mix of credit types. They don't want to see you just use credit cards or just use loans. They like to see a mix of both. And again, those hard credit checks have a small impact, not much. I've got those tips up here on the next page. You can go further into those if you want to. You've got a great section here on comparison shopping with credit products. Dealing with debt is another key factor. So know your rights when dealing with debt collectors because they don't expect you to. If you are contacted by a debt collector, you have the right to and should demand they send you written verification in the mail that they own your debt. Know that debt is being sold and bought on a daily basis, so you can never be sure who actually holds that debt. Also, remember earlier I mentioned the pre-approved credit cards being sent to you in the mail? Well, debt collectors can also call the credit bureaus and say, I'd like the names, addresses, and phone numbers of anyone who has a collections account on their credit report in these zip codes. And they can cold call you and act like they own your debt. How are you to know? You don't have to be notified when your debt is bought and sold. As insane as that sounds, you do not have to be notified. But you are by law allowed to demand written verification be sent in the mail. Always do that. Also, they are only allowed to contact the person who owes the debt. They're not allowed to call family or friends, though that's one of their favorite tactics. They can also only call you at home between the hours of 8 a.m. and 9 p.m. They are not allowed to call you at work, though that is one of their favorite tactics to create shame. You can request the debt collector stop contacting you, and after that, only contact you if they decide to open a court case. This is not really advised because you just invited the option of court. If a debt collector is violating any of the rights listed above, contact a lawyer. But please know, once you introduce a lawyer into this conversation, the debt collector can only contact you through the attorney. Also, please know this, it's one of their favorite things to yell about. They cannot arrest you for the money you owe. And it's illegal for a debt collector to even threaten that. If you do have someone violating these rights beyond contacting a lawyer, contact the state attorney general's office, the Federal Trade Commission, the FTC, or the Consumer Financial Protection Bureau, the CFPB. Now, let's say you do get it verified that they do own this debt. Favorite tactic is to settle, settle, settle. Debt is bought and sold for pennies on the dollar, so it's unlikely they paid even close to how much you owe. All they're going to want to do is get a little bit more than what they paid for. So settle. And you can even dangle a carrot by saying, you want this much money? I'll add on a little bit more if you agree to immediately remove it from my credit report. But at the end of the day, anything that is agreed to in a settlement, get it in writing. Do not trust them to follow their word. Get it in writing. So you've got a little section here on dealing with any creditors or debts. So that is the credit as an asset workbook. Any questions on using that curriculum I did not cover? I should mention this. There is unfortunately no end product like the Start Fresh certificate where they can open a bank account, because there was no way to get all of our partners to say, oh yeah, they can come open a credit card with us. No. Yeah, there is no end product, sadly. It's just for informational purposes. Miss Shannon, did you have a question?
No, I'm good. I thank you for the extra tip on the credit and the assets, which is what, believe it or not, even at my age, I'm still working on. So,
well, the key thing is, as I mentioned, with anything financial education and empowerment wise, it's not taught in schools, so we kind of have to learn on our own. You know.
Yeah.
So the last thing we're going to go over is a quick little PowerPoint, not long, 30 slides at most, on the different tools and resources in the community.
Okay.
So here we go. Stretch run. Once my little toolbar pops up, I can go to slideshow. Come on. Why are you being not nice? There we go. So, the Office of Financial Empowerment is the lead office in the city for these efforts. The three programs mainly that consist underneath it are Bank on Louisville, the Community Financial Empowerment Certification Program that you're a part of today, and the Louisville Asset Building Coalition. The Office of Financial Empowerment is part of the Office of Resilience and Community Services, tasked with equipping residents of Louisville with the knowledge, skills, and access they need to achieve greater financial security. Empowered people create and expand businesses, raise healthy families, support their community, and contribute to the tax base so critical to a sustainable city. Our goal is to ensure that all of the services we offer are accessible and inclusive to everyone in our community, but most importantly to those most at risk. We leverage pioneering work to model municipal government as a laboratory for innovation and demonstrate what's possible for other cities across the country. So Bank on Louisville is the foundational program of the Office of Financial Empowerment. Our mission is to be an engine to collaboratively strengthen our community's economic well-being through improved access to mainstream financial education and services with an emphasis on the low to moderate income. Our strategic goals are to improve access to banking, financial education, and empowerment services, create mechanisms to connect people to services, and establish a community-wide commitment to inclusiveness and accessibility, sustain and grow networks, and be a national presence and leader in this field. So since creation in 2010, Bank on Louisville has helped assist in some way, shape, or form 47,000 accounts being opened in the city. 80% of these accounts remain open, and the average quarterly balance of those accounts that remain open is a little over $1,000, which equates to over $47 million in second chance banking in the city of Louisville. In terms of financial education, we only started collecting this data in 2013. We've had over 24,500 participants across over 1,600 workshops across the community between us and our partners. So you've been through Start Fresh. Certified Start Fresh facilitators are also all across the community at the Louisville Urban League, Uprising, the Housing Partnership, the Healing Place, and many other local nonprofits. It's also utilized in other cities, such as Seattle, Pittsburgh, Owensboro, Henderson, Ashland, and Lexington. We have had 640 participants since it was created in 2012. You've just went through Credit as an Asset. It was launched in 2015 with the help of the Credit Builders Alliance, the Corporation for Enterprise Development, and the Assets and Opportunity Network. It is sponsored by Truist Bank. It has only had 136 participants since 2015. That is because with Credit as an Asset, we've seen it's been much more impactful in a one-on-one capacity because credit is so personal. It makes much more sense and is much better utilized one-on-one than it is in group classes. So that is my suggestion going forward if you use Credit as an Asset. We also have Start Smart, which is our youth financial education curriculum. It was created in 2014 and it is modular with introduction to banking, introduction to credit, budgeting and tracking your spending, and understanding your paycheck. It is done by request and through trained facilitators at the Kentucky Youth Career Center, as well as it is used with the Mayor's Summer Works program. We have had 1,026 participants since it debuted in 2014. That is primarily thanks to the Mayor's Summer Works program. We have been invited to speak in DC at the request of the CFPB due to the curriculum, because as far as we are aware, it is the only local organization in the nation that has its own youth financial education curriculum that created its own. So if you need any more information on Bank on Louisville, there is our website and there is my phone number. I am the primary contact. You know, you've got the certification program we're going through right now, one of the classes. Its primary purpose is to assist frontline social service staff in preparing and having difficult financial decision conversations with the people they're serving. In 2011, Louisville Metro was awarded a grant from Living Cities to build on our foundational work and create a service provider approach that embeds financial empowerment primarily into the homeless service provider system. This was the Money Talks project. But when the grant ended, the organizers and facilitators thought it was too valuable to let just disappear, so they approached the city of Louisville, who agreed to take it over. So our goals through the certification program are to create a common understanding of financial empowerment and the challenges our clients face, to increase the confidence of staff regarding discussing financial issues, to provide guidance on when and how to integrate financial empowerment into your service delivery, to raise awareness about the best standards and practices, to create a support system for you as service providers, and to expand and sustain financial empowerment efforts across the community. So we have had 930 individual distinct attendees across the entire program. They are from 223 separate organizations. There have been 649 graduates of level 1 and 100 graduates of level 2. Overall, there have been 1,569 attendees across 89 classes. As far as we are aware, we are the only city in the nation offering this kind of model and service. You know, I get calls all the time from other cities. How'd you set this up? How can we mimic it? We've also trained staff at Goodwill and the Center for Accessible Living to be the trainers who take the curriculum and train staff across their footprint, which includes Kentucky and other states. The National Disability Institute had us train over 90 staff in Virginia to utilize this program as well. So there's our website if you need any more information on future classes. And again, my phone number, as I am the primary contact for the Community Financial Empowerment Certification Program. So since 2001, the Louisville Asset Building Coalition has provided free tax services in the Louisville community and surrounding Jefferson County. Through the Volunteer Income Assistance Program, VITA, in partnership with the IRS, they ensure that working families and individuals are maximizing their tax benefits and receiving quality tax prep services. They assist clients with maximizing their refunds and credits and also getting access to deposit and savings accounts. Though they are legally a separate 501c3, Metro government houses the organization with office space. In Louisville, over 80,000 families are eligible for roughly $34 million from the EITC, or Earned Income Tax Credit, that goes unclaimed each year. Their goal as an organization is to ensure that everyone who qualifies can access the array of credits they need. They serve individuals and families whose income is less than $66,000 a year. They've experienced tremendous growth in its free tax services over the past decade. From filing 635 returns in the first year to more than 10,000 returns in 2015. In its 18 years of service, LABC has provided free tax prep to well over 100,000 filers and helped gain or find over $170 million in refunds and credits, while saving taxpayers over $15 million in preparation fees. LABC is working to expand their offerings and resources to truly become an asset-building coalition, and not just the VITA people in Jefferson County. They're working with Facilities Management Services to pilot a workplace education and empowerment program that offers workplace financial education, free tax filing, and other resources. There is their website, which is the best way to get through and contact someone at LABC. There's also their hotline. So that's going to be a voicemail service, just a heads up. There's also the Ladder Network, the Louisville Alliance for Development Through Diversity, Empowerment, and Resources. This is a collaboration of service providers, nonprofits, and government agencies that support financial inclusion and accessibility for Louisville citizens with disabilities. The main partners on this network are the National Disability Institute, Center for Accessible Living, Goodwill, Office of Vocational Rehabilitation, and the area ministries. There are more than 500,000 individuals in Kentucky with a disability. 52% are considered not able to subsist at the poverty level for 3 months in the absence of any income. The median net worth of a household with adults with disabilities is $14,000, which is $14,000 lower than the state average. Those with disabilities are twice as likely to not participate in the labor force, which means lower income, difficulty saving, and a greater need for budgeting. There are 100,000 plus disabled households in Louisville. There's also the Accelerate Savings Program, which is one for individuals and families residing in Louisville's most economically challenged neighborhoods who would like to advance their financial stability and asset security. It's a network of 7 service providers who have joined forces to deliver high-quality financial coaching, financial education opportunities, and match savings and incentives. Each coach at each of the 7 providers is asked to work with a client to save in excess of $250. The providers you can reach out to about Accelerate are listed here: the Office of Resilience and Community Services, Jewish Family and Career Services, Louisville Central Community Center, the Salvation Army, Neighborhood House, Louisville Urban League, and the Americana Community Center. So some big partners in the community are the Metro United Way. Their efforts are based on research that shows that an individual is 5 times more likely to reach their financial goal when they access more than one type of the following assistive services between workforce development, benefit access, and financial counseling than a single service alone. They focus on offering services holistically as opposed to referring people out. They launched and coordinate the Accelerate Savings Program, and they co-chair the Bank on Louisville initiative. They coordinate the Advancing Cities grant from JP Morgan Chase, where they received a $1 million a year, 3-year grant to advance digital inclusion and economic resilience in the 6 most economically challenged neighborhoods in Louisville. Uprising are an organization of nonprofit financial counselors. They are certified on practically any financial topic, but their focus is primarily credit and debt resolution. They offer one-on-one sessions in person, over the phone, or virtually. And there is their website. The Louisville Urban League assists West Louisville and other marginalized populations in attaining social and economic equality through direct services and advocacy. They assist the community through direct financial education and workforce development. There is their website, and they are a great partner. They also do Start Fresh for Pink on Louisville. Goodwill is much more than a place to drop off your junk. They provide job training services, disability assistance, and transportation assistance. Two big programs we partner with them on are the Cars to Work, where someone who is going through their services or a low to moderate income person can have access to a car that had been turned into Goodwill, or the RISE program, which are those who are doing reentry and recovery. You know, the Legal Aid Society of Louisville offers free legal assistance for those in poverty. They focus on civil issues, though, not criminal. They can assist with bankruptcies, basic rights, and expungement. And there is their website. L Home, which just started, I believe, in the last year, works to provide affordable loans and financial coaching to promote small business and home ownership for all Louisvillians, but especially those in the West and South End. There is their website, but they also started a very fantastic service called the Financial Navigators Program. The program is designed to help residents deal with the financial impact of the current pandemic by receiving free remote assistance in navigating critical financial issues and referrals to other social services and financial resources. Financial Navigators will help residents triage financial issues, identify immediate action steps, and point to where they can make referrals. You can connect to a financial navigator by calling this number or emailing them at this address. It is a free service, so I highly suggest if you've got someone you're not sure where to point them to these navigators. They're a wealth of knowledge. Another great one is LouisConnect.com, sponsored by Family Scholar House. This is meant to primarily be used through a person you're working with cell phone. You'll pull it up and go through these different demographical questions here and what service they need. And once you get down to what the exact focus is of their needs, it will tell you what organizations locally are offering those services and where the nearest one is. Once you click on it through the person's cell phone, it will either give you directions or the ability to call. So it is a fantastic free resource, LouisConnect.com. So that is it. Any questions I did not cover on our Louisville financial education community?
No, Joey, I think you covered all, but you said you're going to give us a copy of this pamphlet and the slideshow, right?
Yes, I will be emailing out later today a post survey and all the materials from today's session.
Okay.
Yeah.
And if anything comes up where just in general you need any assistance with the certification program, you have my email here and my phone number. But for those who attended today's session, later today you will get that email from me. And if you don't for some reason, please reach out.
Okay. Everything was great, Joey.
Well, thank you. Otherwise, if there are no further questions, you guys are free to head out.
Thank you. Have a good one.
Joey.
Thank you all.
All right.
All right, Shani.
Bye, Shannon.